Hello, everyone. Hope you had a wonderful weekend. Apologies for not being able to put out the video yesterday. I had some software issues with my recording software, so that has since been changed and updated, so now it should be working perfectly fine. So anyway, let's go ahead and just dive into the dollar, starting off on the weekly time frame view, just as usual. Basically, what ended up happening over the past week, we obviously had a very strong move up last week into around that 99.20 to 99.30 area, just shy of it. Looks like a high of 99 to 98 ish. And then we had a little bit of a pullback starting off this week. We've already kind of put in a nice little low so far. Seems to be holding up fairly well. There is a little bit of an opportunity for a little bit further downside test. We'll see if it gets there or not. Not really expecting it to hit those 97.80s. It seems to be holding up pretty well in the 98 range. So as far as everything is longer term view looking at the fib range, we are just above the 61.8 and just about near that mid fib distance between the 786 and the 61.8. So basically that puts the price right about where we are, a little bit below it currently, but it's still possible for us to reclaim that area as we head into the end of the week. So let's go ahead and just switch it over to the daily time frame view. And basically what I'm expecting here is, like I said, should have these lows put in, and we should start challenging the upside here, thinking that we'll probably start testing those 98.70s, basically where we have this wick up in here, and then we tried to make some support at previously, and then we're going to kind of chop around within this area as we head into the future, trying to head back into that 99 area. Now it is possible that we do go ahead and get back up into that area, so after a dip, if we do go ahead and hold those 98.40s, I believe, then we should be able to try to squeeze up into those 99. I believe it's around 99.05 or so that I'm looking at, to be specific, with obviously further upside potential to those 99.20s. I'm just looking at it on the minimal basis as far as a conservative type of a level to watch for, which is around 99 to 99.05, assuming of course that the supports continue to hold. So I'm still looking at dollar trying to rebound a little bit here, at least in the 98.72 area, then pulling back a little bit, maybe to around 98.40 or so. We base a little bit higher, and then we start pushing up into around 99 to 99.05. So let's go ahead and continue on forward. All right, so here's a look at the 4-hour time frame for the gold futures, and essentially the outlook that I had provided last time was intact, and as far as the dollar was concerned, the outlook was intact. I had to kind of remove the lines because it was just a little bit annoying when I was trying to portray exactly what I was trying to say. So that's why you didn't see the previous week's annotations located within that segment. So just to explain myself a little bit there. So for gold, still looking for the further downside push here. I still think that there's a pretty strong opportunity for us to hit around that 1488 to 1475-ish level. I know from my chart it looks pretty naked right here, and that's okay. At least for my own outlook, I use a different template for all of you. So obviously, I'm updating my own personal one on a more frequent basis, intraday specifically. To kind of give you guys a little bit of feedback there, which I hope that you all do, because you have to continuously update to make sure you're keeping track of all the turns and twists. If you're day trader like myself, or if you're a swing trader, you just want to make sure you're keeping an eye on what the turns are and the depths of those bounces and retracements get into. So, needless to say, let's go ahead and continue on forward here. So I do expect to see a test of the lower range here of this large wick to the downside here. 1490 still very possible. We're holding a little bit near that 1500 level, just above around 1506. Don't think it's going to be holding. Like I said, I'm looking for dollar to try to bounce a little bit. It looks like the dollar yen pair also has a little bit more juice left in its tank as well. So, and the dollar yen pair, for those of you that have not been following me for some time and don't understand why I'm referencing dollar yen when speaking about gold futures, dollar yen pair is essentially your fear gauge. So if you're looking at, dollar yen rising, let's say, I think right now off the top of my head, I just did the analysis. I think it's around 107.20 something. So if it's looking like it's going to go up to around 107.50 or so, 107.37, then that means that obviously you're going to have, not necessarily a stronger dollar, but just in relation to the dollar yen pair, you have yourself less fear in the marketplace. Thus, you have a weakening price of gold. So again, if you don't use that as a tool, might want to check that out. Just a little tip for you. Just something that a lot of traders use to kind of gauge what's going on, and then kind of use it to base their gold trades or metals trades as looking for those safe haven locations and where the best bargain prices will be. So I still think that we have, like I said, and I'll just go ahead and cut this out as well since it's pretty much already there. Looking for a little bit further downside here from the 1505-ish area into, like I said, the lower range around 1490 or so, get a nice complete washout at that point, and then we can start looking at a potential bounce at that time. So essentially what you have here is gold trying to establish a new range, aka consolidation. For those of you that have been trading for some time, the technical term is looking for that consolidation area. So again, here you had the top side of the range with a mini range up in here between the 1560 and 1545-ish area, and then we broke back within the range. So typically within this range, and again, this is a higher end of the range, but I like to use the larger outliers, which is the wicks. And in this case, it was a pretty powerful one too. So usually what you'll do is you'll go ahead and retest that level in the future. So now that we are testing the lower or the upper end of that range here, as far as from this distance, this is upper. And basically you're looking at this area getting tested next, which is conveniently enough 1500. Get a break below there, trigger some stops. That's what the market makers like to do, and then look for price to try to gain some support at this area here for another push to the upside. And that kind of gives a little bit of credence that A, dollar yen pair is running out of fuel, and B, dollar is not going to hold too much of its gains beyond that 99.05 level. It's just a theory. It's going to be obviously proven one way or the other in the future, but it is a way to kind of develop a game plan on how to trade and where the strength is going to come from, which pair, fear, etc., etc. So just kind of thinking in a chain of for forward-thinking thoughts, and that's how you kind of get ahead or a one-up on your trading competition. Well, that's basically what we all are. Not trading directly against each other, but again, every trader and investor thinks they're right at any given time, and obviously the ones that are thinking ahead and getting in on the prices at the right times, they're the ones that are always at the leading edge, and that's why most traders lose money versus the smart money that's always ahead of the curve and taking advantage of, like for example, a break below 1500, triggering those stops, loading up on the bids here, and then they'll run the price back up to, let's say, 1520, 1530, and everybody else will be buying just a little bit later. They'll be buying what was bought down here by the smart money. So just a little bit of little bit of my babbling, but a little bit of an education at the same time, since I did not get a chance to put out the video yesterday. So go ahead and just save that, and we'll continue on forward to natural gas and crude oil. And here we are with crude oil that's next up to bat here. And on this particular chart, I can't recall if I actually used this from my own personal knowledge or references, I should say, when I was trying to find a cleaner chart, because I was kind of dealing with some conflicted views. So I like to kind of go, and I think I actually accidentally used this public template. So in either case, I was looking for oil to look for a further downside push all the way down. I think it was below into the 40 area, longer term view. I don't remember exactly what time frame I used for this, but I know that at one point in time I did accidentally overwrite this template, and I was looking bearish. And in all fairness and transparency, of course, had I been able to do the video yesterday, I would have, and actually was looking for oil to fail actually right up in this 57 area and looked for a retest into that 55.67 level. So again, stop would have been triggered here had I taken this trade, and the outlook obviously would have been incorrect. But again, now that we have all transparency and all cards on the table, we can go ahead and continue with the analysis. So now that we have actually regained the 57.60 level, which is amazing to me, but again, it is what it is. The market does have a way of surprising, and we just have to go with the flow. It is what it is. So as far as a further upside for crude, I think that we should be able to push into around 59.20. It is looking like it's squeezing. It's got some strength behind it right now. The trade talks that are going to be taking place in October obviously are also supporting prices as well. So again, looking at probably a 59.20 top out here. And the reason why I'm saying that here, just looking at the daily time frame, hopefully this fib is set up. Looks like it is. So basically, what I'm looking at is a revisit of 58.90, and then potential for a further push up into, like I said, around 59.20, which would be about the mid fib distance here. And I like to target those mid fibs, as it's a pretty good stopping area. So, like I said, around 59 to 59.20 is possible on this move to the upside here. And then we should be looking at a retracement back, and the retracement should end up taking us back into, from that 59 area up, and I'll adjust it shortly, but back into this 56.10 area. We had a lot of chopping that actually happened in this area. As you know, some of you that are trading crude exclusively can reference that. I'm going to go ahead and just delete this as well, since I remember to do that now. So again, I'm going to go ahead and just adjust this real quick, but I am looking at 59 to around 59.20 to the upside here. And then from there, we should be looking for another pullback into that 56.10 area to kind of keep it still wound up tight as the talks or trade talks continue. And whether or not they actually produce anything is nothing that I really care to understand or anticipate. I'm just looking at the general price action, and obviously we've had crude trying very hard to go to the downside here. We negated that downside push, reclaimed the 38.2 fib level, and now making our way up into that 50 fib level. So again, nice squeeze to the upside here. You have to be, fluid and adjust to what's happening in the marketplace, and obviously the China trade talk news, the talks resuming, should say, kind of got this market a little bit more excited, and specifically the crude market or energy market as a whole, because natural gas is another story, and I'll get into that shortly, where we have price looking for a little bit higher here around a 59.20 area, and then again looking for a revisit of that 56.10 area for confirmed support, and then we'll probably end up bouncing off that level again to retest the 57.70 level. So I'm just going to go ahead and just save that, shut my mouth, and continue on forward to natural gas. And natural gas, I think I had mentioned in my last video that we were looking at a potential hold of around the 240 area. I don't recall exactly the specifics, and then we were looking at a downside move potentially. Again, that was negated once we did break and hold above that 230 area, I believe it was. Just going off the top of my memory, folks, you have to forgive me. I do a lot of different analytics on different pairs, and to remember every single thing that I've said verbatim, number one would be amazing, but obviously I'm not that amazing to that degree. So in any case, had I been able to do the video yesterday as well, full transparency of course, was very impressed with the way natural gas had squeezed to the upside here. We ended up holding that 233 area, and I think that's what I said. Hold that 233 area, and then we have a bullish move potential up to that 249 area. Now, we ended up squeezing above that, hitting above 251. A lot of people took that short. Big mistake, folks. You got to let these moves play out above 250, and obviously we held support extremely well. I'm looking higher now, and yes, I know I was calling just a few weeks ago, 2 weeks ago, I was looking for prices to continue to get slammed to the downside. Again, the trade talks had a huge factor in the upside move in energy as a whole: crude, Brent, natural gas, etc., copper as well. And that's not obviously an energy, but a metal that also took a nice little bump to the upside, as that's an industrial metal, and of course anything tied to industrial output is going to also rally on that news. So needless to say, still looking for further upside here on natural gas. Now, I am not long on it at this time. I ended up taking my money earlier here, closing out, and then I did not chase it afterwards because I had my eyes on different areas. So my pup came over to kind of say hello, so I got a little distracted there. So as far as natural gas is concerned, let's just go ahead and make it easy, and that is go to the daily time frame view. And basically what I'm looking at here, now that we are squeezing, and a lot of folks got short on natural gas, just to kind of give you a background of, some of you may be going, why would you go short natural gas right now? Well, the main reason why is we do have a lot of traders who are strictly basing their trade slash investment on fundamentals, and this is a big mistake a lot of people tend to make, is that they tend to anticipate what is the down season, or shoulder season as it's referenced or referred to frequently by a lot of the traders or investors in this particular sector. Now, you can have downside in a particular season, but you can also have price action just completely say the heck with that. And because this has been beaten so badly, and I did warn about this a few weeks ago, that there was an upside potential that could occur don't know what the trigger would be, and clearly it was the trade talks that got this market really excited. So, in any case, I'm looking now up into around 270, all the way up to about 270. I think it's 277.5 ish is the actual mark that I have on my personal template, and this one is obviously a reverse fib here from the lows, so it's not completely accurate. And this trend line, I don't know why that's even there at this point. Sometimes that happens on investing.com, so I apologize for that. But again, if you're looking back in time and you're looking at what's happened back here, was it back in 2018, and you take the fib levels here from the top to the bottom. And I'll just go ahead and gut this out of here since this fib is kind of null and void at this point. The 23.6 fib is basically this top of the red line here. That's your 271 basically. And then from there you have an opportunity for a further squeeze up into around 276 or so, as high as maybe even 2.8. So the squeeze could get real. It could hurt if you get in too early. Make sure, folks, I can't stress it enough, and I've seen people blow up accounts because of strictly just carelessness or ego, combination of the two. Don't just think that it's going to turn around and you're going to be able to make money on it or close it flat. If you're in a position where you're losing money and you're praying that you could just close flat, then you need to readjust your strategy and really focus in on what mistakes you're making, because you should never be in a position like that where in the next trade that you take that you couldn't overcome the previous loss and be profitable again on the week. Okay, so like I always say, you have to have a measured risk versus reward ratio when you get into a trade, when you get into a setup. If you're wrong, just admit it. Just let it take you out of the position. A failed buy signal is a confirmed sell signal, and vice versa. So again, if anybody has any questions, comments, or concerns, and I'm not sure if I lost anybody in this, my upside target still looking at 271 here to around 277. 5 to 27, just shy of 278. So that's my upside targets here for natural gas. Is the squeeze does have more juice, especially if those 250s continue to hold up as support. I'm not saying we can't dip in the interim. Watch for the 250 support level. That holds up. You'll have continued movement to the upside here as the shorts continue to bleed money and scramble to cover. So again, if anybody has any questions, comments, or concerns, you can comment on the video below. I am, trying to get as engaged as possible with all of you on YouTube. I do see comments and I appreciate the feedback I get. Also, I do have a 2-week free trial that I do offer, and there's absolutely no obligations. You can obviously reach out to me if you need more information. It's all pretty much spelled out on the before and after of all of my videos, as well as on the website and the about section of my channel. So again, if you have any questions, comments, concerns, just want to say hey, you do a good job, you can shoot me an email, thetradersperspective@gmail.com. I always appreciate getting the feedback and any types of tips that any of you think that would benefit me to get myself out there a little bit better as well would also be appreciated. But again, I'm not looking to get the spotlight on me. I like my privacy, and I just like to provide a good job for the public, for anybody that may want to also come on board and become a member of thetradersperspective.com. So without further ado, I will wish you all a very wonderful and green trading week. I will update everybody either Friday or Saturday. I would like to get done my video on Friday for everybody. That way I can enjoy at least one day without looking at charts. It's been a little bit crazy of late. So any case, again, green trades to you all. Talk to you soon. Stay tuned.